Aloha, aloha. It's my last day filming a video here in Hawaii. I want to give a little recap on where I'm at, what's going on, funding ticks, my account, and some of the things that I've kind of learned, or maybe I've not learned, but things that I've been kind of hyper focused on the last few weeks to focus on, well, to get to where I'm at right now with these green days. The one thing that I do want to point out is even with these green days, even with all of these green days, I have had losing trades. You don't have to, be 100%. You don't have to make money on every single trade to end the day green. But the goal, obviously, is to find some type of consistency. So if you're going to enter a trade, I think about it always like, okay, if I enter this trade, like, am I going to be able to make that money back on the next trade if this trade doesn't work out, right? That's like kind of a good little psychological idea. But like, okay, I'm going to risk 500 because on average, I can make $500 on a green trade kind of, consistently, right? So lose 500, make 500, lose 500, make 500, make another 500, and I'm going to be all right. You can see here, like even, making all that money, I made $12,000 between 9 o'clock and 10 o'clock, but I've lost 5,000. So I've made 12,000, but I've had $5,000 in losses during this time period. Whereas after 10 o'clock, I've had a lot more profits. So, maybe trade after 10 o'clock, Patrick. Maybe trade after 10 o'clock and not 9 o'clock. Whatever. Okay. Now, you can see here my kind of overall P&L chart with the Funding Ticks account. This is the 100K Funding Ticks zero account, and it's been just boom, boom, boom to the moon. And looking right here as well, you can see I've taken two payouts, $5,000. You get $2,500 per payout, two payouts, three accounts, $15,000, something like that, around $15,000. And you can see these payouts have been approved as well. Maybe if it loads. There we go. Payouts. This is all started basically since the end of June. So you can see June 30th and then July 9th. For these three, I kind of started this different, but now we're caught up where each of these three accounts is July 17th for the last three payouts, and you can see those payouts. So moral of the story, funding ticks, the zero accounts, getting paid out, making some money here. That's what it's all about, right? That's what it's all about. And I want to show you guys a little setup, and then I'm going to show you some more stats as well, kind of like mix it up between some setups and some stats and talk about kind of why I think I'm in a good spot right now. Why am I trading well right now with the idea that I've actually got less stuff to look at, right? When I'm at the BDH, I normally have 4 monitors. Here in Hawaii, I've got 2 monitors, basically. I've got one chart over there, and then I've got one chart over there. Well, 2 charts. NASDAQ, ES, 15-minute charts. Kind of hyper-focused on the 15-minute chart for the overall direction. If I see the 15-minute chart is chopping, then I might be a little bit less, inclined to taking a breakout setup or to taking a, just a momentum style setup, because I'm like, hey, clearly I see that the 15-minute chart is chopping. Let's slow it down. I want to talk about this chart right here. We talked about this the other day during the live stream on why this was such a good bear flag, right? If you're watching this video right now, I want you to kind of take a second to look at this chart and be like, what makes this such a good bear flag, right? Because we broke below these lows. We had a bunch of wicks on the bottom of those candles, and again, we had a bunch of wicks there. So it's kind of like, ooh, there's a lot of wicks going on, okay. I don't know about all that, but we got some wicks. We got some stuff going on. But either way, let's just kind of focus on where those wicks are happening. A lot of the wicks on the bottom of these candles, some small little wicks there, but overall it's like, not the best, right? Not the best looking wicks there for all those accounts. So check this out right now. As we have this set up, what was like the big kind of thing about this move that made it a good bear flag for a good entry for a short? Right, because we were watching this. We traded it live on YouTube, by the way. This is not like me just talking in hindsight. I talked about this as it was kind of happening. The fact that we break out this little red candle right here, it pushes up, right? It pushes up. It takes out this wick, takes out all these highs, hits the 21 EMA, and then closes very bearish below the low of these two candles, and you just get that kind of engulfing candle back down, right? It's right down, back down there. It's like the engulfing candle. And what's funny is, if you look at this, right, look at it on the replay chart, and you'll see how that candle actually, for a very small second, it was obviously looking like a green candle, right? Can't really see it there on the replay, but you would have seen, like, obviously kind of that green candle for a second. It gets denied, it pulls back. Here's your entry, right? Your entry is that kind of candle to break below this candle. The fact that we took out these candle highs, I kind of really, like, I don't know why, but I've really been liking this idea of, like, if a candle takes out the previous high or low of those three candles, it gives me a much better entry. Because I'm like, hey, there's clearly something going on here. We pop above it, we get denied, we come right back down. I'm getting short. I think I might have gotten short like at like 23.09 right here, whatever it was. It might have been on this candle even. So I get short, and then I'm looking for some continuation kind of like through that 23,000 area. And obviously we ended up getting it there. But these charts sometimes. We got it. We got the move. Where is it? Where'd it go? Where'd it go? Where'd it go? There it is. But yeah, obviously we got the move down. We got down there to the pivot point, and then kind of chopped around some more. I'll see if I can find another setup that we had where we kind of trapped those 3 bars. 3-bar trap. We're calling it the 3-bar trap. You like that new lingo? You can pay for the Patrick Whelan course to learn all about the new bar trap, the 3-bar trap. 3-bar trapping. Okay. Again, we took this actually for a long the other day. And it's not a good bull flag, right? It's not like, this is not a bull, considered a bull flag by any means. But we point out something, right? We basically like had the low here, 72, so pretty close to like the bottom of this little candle there. But we took out this candle low, we took out this candle low, and then we reversed. So we're showing that there's obviously, kind of like this, let's say, pressure, price action pressure, kind of like a triangle. And the fact that we took out this low, and then we reverse, we start to push back up, that's kind of like a very bullish like indication, right? Like, okay, like, oh, okay, that's cool. I like that. I like the fact that we took out these 2 lows. So it's like, if I'm entering here at 85, which we did, we took that trade live on YouTube. But if I'm entering for this breakout above that previous candle high, well, the fact that we took out those lows there, it kind of like gives me an idea like where my stop loss should be. So it's like my stop loss. If I'm getting long right there, my stop loss can basically be like right there. And then I can target kind of like this high. So it's basically like 85 up there to the 120s. And like I said, we took this trade live on the YouTube. And then again, kind of the same setup here, right? We talked about this one as it was happening. So we take out basically 1 candle, 2 candle, 3 candle low, right? The low there, it gets taken out, this candle. And then we kind of chop, and then what do we do again? Bang, bang, bang. We take out 3 candle lows on this candle, and then we break out. So 3 candle bar swipe. I'm liking it. Been focused on it. Been like, hey, are we getting that kind of, that clearing of the levels there, I guess you could say. Are we clearing out some stuff there? I like it. I like the kind of fact that we're clearing out that the low of those candles, because if we're kind of taking out those lows of those candles and then we're reversing, well, then it's like, kind of nice. Same thing kind of here. This candle opens up right here, takes out these 2 lows again. I mean, this like kind of these candles here are taking out these lows. I mean, obviously it's not always gonna be perfect, but like the fact that we're kind of we took out these 2 candle lows, and then we're like taking out this candle low and there again. So it's like, I'm really looking to enter into these candles, bullish candles, for a reversal once we're kind of taking out those previous candle lows, because I'm thinking about it kind of like as a trap as well. It's like, oh, I like that trap idea. It's like we're pulling back, we're taking out those lows, those candles. It's stopping people out. It's getting that liquidity, getting ready for a move back up, right? I don't know like if that really is the theory here, but it's been working, right? And I got the proof to prove it. You can see here for the month of July so far, right? For the month of July, this is my straight to funded account. We have made $15,000 and we're trading with about 87% win-loss ratio. Now, that win-loss ratio does not mean really anything. At the end of the day, it really don't. People are going to sit here and be like, oh, I got a 99% win-loss ratio. It don't matter. At the end of the day, all that matters is this, right? What's your largest losing trade? What's your largest winning trade? My largest winning trade is $885. Crazy, right? You're going to be like, wow, I thought you'd make a lot more money. But if you look here, my largest losing trade is $855. So I really, I could maybe manage those losses a little bit better in these accounts. But again, I kind of trade with that 1-to-1. Is it the best way to trade? Probably not, but like, hey, it works, right? It works. And it's working for me. I've got a high win-loss ratio. So I'm able to kind of do that. Not to say that everyone should do that, but like people get so hyper-focused on 1 to 3, 3-to-1 risk to reward, or 1 to 3, 3-to-1 risk to reward, that they end up like playing against themselves, right? They're creating like this FOMO, this emotion that every trade has to be a 3-to-1 risk to reward. So either you're not getting into a lot of trades or you're, holding for too long, you're getting stopped out or whatever it is. The best thing to do, I think, really is just to like, if you're in a trade, there's momentum, you've got a key level that you're looking to take out, take it. If the market's kind of not really giving you that follow through and you're up 20, 30 points, just take it, right? There's nothing wrong with just taking that profit, especially like doing it over and over and over, because at the end of the day, you'll end up being green if you just keep on taking that profit and cutting off your losers, right? Obviously, if we're taking profit, we want to make sure we're cutting off our losers as well. But again, where are we at? Month of July, we're sitting at $15,307. And remember, guys, this is me waking up at 3 o'clock in the morning. 3 o'clock in the morning, waking up, trading, and then going fishing for 2 hours a day. And this is 3 accounts. So that's $45,000 that I've made trading 3 accounts in July while going fishing every day, while being in Hawaii, while basically being on vacation, right? I mean, I'm not going to complain about that. I'm not going to complain about it. And that's for that is for sure. I'm gonna make that money if I can. I'll make that money if I can. All right, so kind of found another little setup here. You've seen the profits. Now you know. What I think, what I've really kind of like been focused on more than anything is looking for those traps. I want to see traps. I want to see a trap because the trap gives me more confidence that I can hold, or it gives me a pretty good level for my stop loss, whatever it is. It just gives me a better kind of overall feel, right? A feel for that move. Here, good example, almost a good example. It was real close. Either way, what do we got? We got 3 candles getting taken out. You got this candle, you got this candle, you got this candle. This wick right here took out these 3 candle highs, and then we dumped straight down. I like it. I like that setup. I like that kind of move. Kind of the same thing we talked about yesterday. When you look at these bear flags, I look at these bear flags here. If you're looking at these bear flags, like why at some point, these bear flags kind of turn into consolidation. They don't go lower, and they kind of just start chopping around. But you can see the difference here between like this type of bear flag versus like this type of bear flag, right? So really you're kind of like, you're looking for that candle to make kind of a new low through that candle. So you're kind of entering short there at 222, and you can see how it kind of just waterfalls down there to that next level. But look at that, like kind of quick reaction, like back up, right? That quick reaction back up. And then here we kind of get it again, but then we don't make a new low. And then we start kind of chopping through here. And then we're like in that consolidation mode before kind of going lower. And what happens there, we look at the bigger time frame, and you can see like kind of on the 5-minute chart how that was kind of a bigger bear flag on the 5-minute chart. So I think you really got to be aware of what that 5-minute chart is doing. You know, I want to see, like, is the 5-minute chart kind of oversold? Am I still looking for a bearish setup because the 5-minute chart is so oversold? Or am I looking for maybe some chop? Am I looking for maybe just a reversal because that 5-minute chart? Remember, like, the 5-minute chart is going to build out a bear flag, and in that bear flag, you know, when that bear flag is happening, that's kind of like you're going to get like little kind of like mini kind of bull flags in the sense that the market's going to kind of like push back up, and then that 5-minute bear flag is going to go down. Same thing with, like, you know, the 15-minute chart as well. Kind of looking here to see where there's some more setups. We were kind of just like chopping around there a lot on Friday, but I think, you know, again, we had that kind of three candle swipe where we trapped above the highs, those candles, then moved down there. That happened at 12 again. So yeah, it was actually a different setup there. Like here's a pretty good example again of kind of like we trap, you know, that 200 level here. This candle right here dips down. It takes out all these lows, previous lows. And then these candles here, just, they can't even get anywhere near this candle low, right? So that gives you an idea of like, okay, this is that candle low. These candles are just, they're not moving down. They're not moving down there. So if we do start to kind of get that break back up, there's a good chance that we, again, kind of that triangle type move where we could try to retrace some. We're above that EMA there. We had the EMAs crossing there as well. That 1-minute chart with the 9 EMA, the 21 EMA. I think I'm really just trying to be like more aware of where I'm entering based on kind of the higher time frame, but also based on those wicks, you know, the wicks on the 1-minute chart, 2-minute chart. You know, what are those wicks telling me? It's like, hey, you know, we took out these lows, those 3 candles, we took out the lows. We then kind of like just get stuck in this area, but we took out those 3 candle lows. So it's like, do I want to be short? You know, do I want to be like short in here? Probably not. Especially the fact that we have like that low right there. So that low right there is kind of like, it's invalidating the idea that I want to be short, you know, right here. If that makes sense. If that makes sense. Because even earlier, like you can see on this candle kind of wicks down. And yes, we kind of like get that little mini bear flag back up. But like right when we take out that candle low, you know, we take out that candle low right there, we just reverse right back up, chopped around, and then went higher. So I think you got to be aware of what these candlesticks are looking like in the sense of, you know, where those wicks are and what those wicks are kind of doing. You know, a lot of wicks on the bottom of the candles kind of telling me that there's some buying pressure. More wicks on the top of the candle telling me that there's some selling pressure. So, you know, it's a fugazi. Who really knows? I don't really know. But all I do know is at the end of the day, we're making some money. All right. We're making some money. We're doing it live on YouTube. Make sure you tune in 9 a.m. I will not be live on Monday because I'm flying back from Hawaii. I'm going to miss you guys, but we'll be back at the BDH next Tuesday. We got some big stuff coming up. We got the mentorship. We got some big giveaways. We got all kinds of fun stuff happening. And if you guys have not already, hit that like button, subscribe button. If you enjoy these videos, let me know in the comments down below. What should I show? What should we talk about? And I'll try to get some more videos out for you guys when I get back to the BDH. There it is. Peace to the Middle East.